Welcome to TheoTrade. This is Don Kaufman. It's November 22nd, 2019, and you are watching the TheoTrade Weekend Update. Risks, well, they're amplifying as the markets are failing to really gain any new ground. Really, the question, though, kind of lies in the fact that, why are the risks amplifying? And I'm going to do my best here in the next 15 minutes to display precisely that to you. A trade that you absolutely, whether you're an investor, whether you're a shorter duration trader, whether you're an intraday trader, you need to understand some of the inner workings of the volatility trade that is so very much. It's back, people. And if you're not familiar with what I'm talking about, I'm referencing the short vol trade, which is really, again, beginning to kind of amplify the entire market exposure. Before we get there, let's talk in general about markets and this past week of trade. We did see, a spark of volatility kind of midweek, but markets, generally speaking, listen, this central line right here, these are my expected moves specifically inside of the SPX. What did we do? Well, week over week, we lost minimal ground. We really started the week inside of the S&Ps right around, 3120. We ended the week lovingly at 3110. For the most part, we're talking about a $3,000 product. That, people, is what I call massively unchanged. The rest of the major index products did the same thing. Whether you want to look at the Russell, whether you want to look, at really the Nasdaq, any of the products have effectively done the same thing, and that is sputtered and drifted very, very mildly to the downside. Now, one of the points I like to make kind of week in and week out is about expected move. And the expected move, well, in this last week of trade, right, that we just passed through, we had an expected move right around $32 and change, and we just got shy of tagging it here on Wednesday. Well, this next week, of course, we've got a holiday week of trade. How is this next week going to break down? Well, first and foremost, we have 3.5 trading days. You have Monday, you will have Tuesday, you will have Wednesday. Thursday, obviously, we're out of the contest. It's Turkey Day, people. Thanksgiving. And then Friday, yes, the markets are open on Friday, but it's really kind of what we call a trading session, right? It's an abbreviated trading session on Friday, which happens to break down to Black Friday. Fun little story. One of the very first times as a child, I went to the trading floor on the Friday after Thanksgiving in Chicago. It used to be, bring a kid to work day. So I was interested in what some family members did. This kid got to go to work on the floor of the Chicago Board Options Exchange as a young trader. That's when I was still in the single digits out there. With that, let me actually break down, though, again, a little bit of this week before we get heavily into some of the trade. So next week, we're expecting this $27.42 move. Again, it's kind of a diminished move, and it's diminished because, again, we're kind of closed. It's holiday trade. Now, don't get off your game, all right? Just don't get off your game just because we're like, well, it's a holiday week and everybody kind of, falls by the wayside. Don't completely get off your game. You can still have quite a bit of action. Why? Well, we're facing what I term the China conundrum. This is not an easy situation. It's also a situation that may not necessarily play its hand out in the very near term. What I'm talking about is the entanglement between the administration, obviously the bill that's being passed in Hong Kong, and the Chinese trade war. Just remember, the risk in there, it's absolutely, it too is amplifying. All right. That's not one of the risks predominantly that's amplifying. Really the short volatility trade, which we're going to get to here in a moment, is what we're really going to reference. But with this China conundrum, you have to look at this entire trade deal, which you kind of feel like, this thing is going to happen. It's priced into the market. It has to happen. From my seat, I'm giving you best 50-50 odds right now. This is going to be a tough deal at this point in time to kind of drive through with everything that's effectively going on right now inside of Washington. All right, moving on from that one, because again, when it comes to China, making any assumptions on here, come on. It's a wing and a prayer to really try to decipher. There's so many different, players on the same chessboard, you don't know which direction you're necessarily headed. But the fact of the matter is, the market kind of feels that the Chinese deal is over and done with. And I would counter that. Again, I'm giving you best 50-50 odds on a deal getting done, anytime before what? Maybe the end of January. All right. And that's, again, a ways out. Next thing we got to focus on here, rates. Let's actually pull up the TNX. Okay, the TNX, this is the 10-year Treasury. Now, I point this out kind of week in and week out, but listen, the rates, what have they done lately? What have you done for me lately? The rates, they've dropped. We hit almost, that 2% mark. Now the rates have actually dropped to 77%. So as the rates drop, effectively, the reason I'm covering the rates is because the rates, as they drop, well, it should drop none other than the financials, but the financials are maintaining. So the only way that I can really kind of script this out is to take you over to the financials for just a moment. When I say the financials are maintaining, I mean, listen, in the backdrop of this, interest rates heading back down is putting, a 1,000-pound weight literally on top of the head over here of the XLF. And I start to fear that this could crack to the downside. And yet, instead of fearing it, what I'm actually doing is I'm placing a number, of out-of-the-money risk twist spreads, well, looking for it. So I'm all the way out here into March, and I'm using a risk twist spread. It's like a funky little ratio back spread to, to go after if the financials are going to drop and drop hard anytime. Between now and again, you'd have to zoom way out for this one. I have all the way, until what? I've got some January on, but I've got some March on. We've got quite the distance, about 100 days for there to be a big pullback inside of the financials. And we will be sitting, again, in a very nice position specifically in there. So this is one, again, you got to think about the financials in this next week of trade. And I know it's holiday week of trade. Everybody's kind of like, okay, nothing can possibly happen except that, even last year. Well, let's go to it. If, nothing ever happens, around the Thanksgiving time frame, you only have to go back again, to last year at the exact same time frame. And we were in the beginnings of some tumultuous volatility at that point in time. So listen, I don't like when people, it's the Christmas rally is coming, except if we sell off huge, there can be volatility at any time. If, again, you don't recall last year in November, December, some of the most volatile trade that we've seen in years. All right, so that's rates drop, but financials kind of maintain. Now we're going to get serious, all right? The next few minutes of this video, strap in, sit down, tune in, turn on. When I say we're going to get serious, we're going to get really serious. First of all, the short vol trade. That's a short volatility trade. It's back, baby. It's back. It's bigger than ever. It's absolutely back, and it's bigger than ever. Effectively, what we're talking about, are traders that are net short volatility. Now, this is an incredibly complex and very convoluted trade. I could legitimately spend 3 to 4 hours just talking about all the nuances of the short volatility trade. But what I want to start with, is just a quick glance at the VXX. The VXX, The VXX is an ETN, and the VXX is actually constructed from volatility futures. So let's just all be aware that these volatility futures contracts construct the VXX. Let's also be aware that the VXX, this is B. There used to be, a VXX Part A. So there was a VXXA. Now we're on VXXB. Why are we on VXXB? Because all these volatility products, they're on the race to zero. They all eventually, collapse. But right now, it's more than ever. The volatility trade right now is absolutely hideous to the downside. Now, time out. I don't want you to think for a second that you can go out here and try to buy puts and let this product adjust down. It doesn't work that way. I don't want you to think for a second that you should be short volatility, because if you're outright short volatility, people, you can get your absolute head taken off. What I'm about to explain to you, okay, is a highly convoluted trade that is being done, okay, by some volatility arbitrage experts. But it's imperative that you understand what these traders are doing because it's going to impact everything that you do inside of a marketplace. All right, what goes on, okay, in volatility to cause the VXX? Okay, it almost looks like an option decaying. Instead, in this product, they actually call that drag. That's not like volatility hasn't gone down that much. Come on, go look at the VIX. Okay, the VIX is like, all right, volatility went down, but the VIX kind of maintained itself, from what? The entire month of like November, the VIX is just kind of channeled back and forth. What's the VXX doing? Okay, the VXX is in what we term a outright death spiral in the same time frame. I mean, it is. It's in an outright death spiral because what's going on has everything to do with these volatility futures. Now, I'm going to spend just 2 minutes kind of explaining this, okay? And we'll just go forward from there because, again, this could take, a little bit of time to do, but I'm going to give you the 2-minute version. Okay, what happens with volatility futures? Volatility futures, you have 26-day volatility futures, and then we're going to jump out to the 61-day volatility futures and 89-day volatility futures. Okay, volatility in the next 26 days is sitting right there at what? At 1480. Now it's sitting at 1480. Why is it 1480? Well, that's what volatility is for the next 26 days. But then if you go a little further out in time, 61 days out, okay, you can see volatility sitting what? At 1668. And then volatility 89 days out is all the way up to 17. So what you have right now, okay, is a very steep, okay, volatility kind of curvature. So short duration, this is short duration. This is representing 26 days. This little monkey, let's call it at 15. Go a little further out in time. Okay, and that is 61 days. That little monkey right there is sitting, let's just round it. Let's not get crazy. That one little monkey is sitting at 17. Then you go all the way out, 89 days out. Okay, and that little one is sitting at, let's say, 1780. I'm just rounding. This is a wildly steep, okay, volatility curvature. People talk about contango and backwardation. What it breaks down to, in the next 26 days, okay, things can happen in the marketplace, right? The world can blow up in the next 26 days, but they only assign about a 15 vol for it, okay? But in the next 61 days, there's more time. And given more time, there's a higher probability that the world can blow up. So what do? They assign a 17 vol. The differential between these two is nothing less than phenomenally large. It's huge, okay? That's why I said, how steep is steep? This is steep, okay? The differential between these. Well, what happens is your product, the VXX is constantly taking, okay, these contracts, and what do? To create the VXX, they have to buy, okay, the 26-day vol. And then eventually they have to sell that and then turn around and buy, okay, like the 61-day vol. And they're constantly rolling these contracts out. So what do you think happens? What do you think happens when you go from a contract that's at 15 to a contract that's at 17? Right? Well, you lose $2 because you got to roll it out for $2. Where does that $2 come out of? That $2 comes out of the VXX. There it is, people. Okay. In a nutshell, in the last 2 minutes, we just explained precisely why, okay, the VXX is in an absolute death spiral. Now, here's the really, really scary part. The scary part is this. All your products, VXX, right? TVIX. Let's go look at TVIX. I think they're reverse splitting TVIX like 5-for-1. Look at TVIX. Okay, there's like no shares left. There's like 1,000 shares left. Okay, because they keep reverse splitting it. Eventually, again, all of these, they go out of business. They just go, we've decided to cancel it because it's not working anymore. This is the UVXY, which is like double death spiral with cheese. What I'm saying to you is if you hold these products for any given period of time, by the way, that's a real quote. That's a real quote. It was at 85,000 and now it's at 15. Okay, they all go to zero. And if you hold this product for a few days, let me just zoom into this year. If you hold this product even for a few days, the product decays. Okay, and it's not called decay, it's called drag, whatever you want to call it. It's absolutely brutal. Now, how does this tie to you? Okay, how does this tie to risks are amplifying as markets fail to gain new ground? As the markets are not moving, okay, what do you think trading firms are doing out there, people? What do you think they're doing? Okay, they are selling the, how do I say this eloquently, living crap out of these volatility futures. Why are they selling the volatility futures? Because they know the volatility futures are going to look like this. So long as the marketplace stays rather idle, okay, the volatility futures go down. They go down big. But I actually have to script this for you as well. So these firms don't go out and just sell, okay, volatility. They don't just sell volatility. It's a little bit of a convoluted trade. I'm going to take you over here to the trade tab and kind of take you into it. Okay, one of the things that these volatility, traders do, they'll go out there, all right, and I'll just script this way. They'll sell, okay, vol futures. They'll sell volatility futures. You sell volatility future. What do you think happens to somebody that sells volatility futures if the market crashes? They'll lose everything, all right? Because this little volatility future, if the market crashes, will explode. It'll go to 30, like literally overnight. It'll go to 30. It'll go to 40. It's crazy. If the market crashes, you're dead. So they sell volatility futures, but they turn around very often, okay? They'll do things like buy SPX puts. And they're going to buy SPX puts, okay? Or they can turn around and buy VIX calls, okay? These are ways that you could hedge, say. Or what else could they do? I can go on for a half an hour of all the different trades they could do. They could turn around and buy, okay, VXX calls. So they could buy VXX calls against short volatility futures. They could buy VIX calls against short volatility futures. Or the easiest one is they could just buy puts in the SPX. That way, if the marketplace crashes, what do? They get killed in the volatility futures, but they make a ton of money inside the SPX puts. Now, there's a problem inherently with this. Time out for a second. Time out, because at this point, your head's spinning, right? Bridgewater, 1.5 billion in puts. So there's this big rumor that Bridgewater comes out. Okay, here it is. It was actually by the Wall Street Journal. Oh, you got to trust them. Bridgewater makes, okay, a 1.5 billion options bet on falling market. First of all, timeout. Okay, they're going to make a big bet like that. Okay, this is one of the most complicated trading firms on the planet, and you think that they're just going to go out there and buy 1.5 billion in terms of puts, right? I mean, that's what I'm supposed to believe. Well, the paper says it. It's the Wall Street Journal. Okay, it's absolutely ridiculous. Okay, it's ridiculous. And by the way, okay, it's the world's largest hedge fund takes a big bearish bet. The founder, okay, says the firm's overall position in the market isn't negative. In fact, he came out on CNBC, okay, it's reportedly betting on a sell-off, but the founder denies it. Of course he's denying it, because they're not necessarily taking a bearish position, okay? They're selling volatility futures like there's no tomorrow. The 1.5 billion in puts is their hedge. We are in deep, people, really deep, because let me show you, okay, what's going to occur inside of this trade. All right, so the dynamic of the trade is a very simple one. And the dynamic of the trade kind of goes like this. And I'm going to re-script this out for you guys so you understand it. They've gone out and they sell, okay, vol. They sold volatility. And then they turn around, okay, and they buy SPX puts. I'm simplifying it, but they're selling vol like there's no tomorrow. They're selling it in the volatility futures, VXX, you name it. They're selling vol like there's no tomorrow. And they buy boatloads of puts. Okay, but here's the problem with that trade. Okay, the problem with the trade, they're buying puts. Someone's on the other side of it, and that person has to sell them puts. The person that sells them puts, okay, likely a market-making firm, probably somebody like, like Citadel. So Citadel's probably out there selling them puts, or another market-making firm. When you sell puts, if the marketplace starts to progress to the downside, the sale of puts would be in very serious trouble. So what would occur in this trade, if they're selling volatility and buying puts, okay, someone is left with a massive short put position. They would take that short put position and they would hedge it, okay, with the S&P futures. But what's going to occur if the market starts to progress at all to the downside, okay? The person that's short the puts has to sell S&P futures, but the firm that sold volatility also has to go back and buy back vol. They have to turn around and buy back vol. When you are short volatility and the market starts to tank, you got to buy back volatility. By buying back volatility, it exacerbates the move on volatility to the upside. At the same time that you're exacerbating volatility moves to the upside, what's going to occur? That's actually going to force the S&Ps to sell off harder. If the S&P is forced to sell off harder, okay, the traders that are actually short these puts, they have to sell more S&P contracts, and we actually head to a downward spiral. What people do not understand about a very simple idea, being short volatility just creates an absolute, okay, amplification of risk in the marketplace, maybe like you've never felt before. Well, this actually has already occurred a number of times in recent years. In fact, the last time that's so notable is when we had what we termed the VIX-explosion. Okay, and the VIX-explosion was, I mean, it was, a short little bout of volatility, but you could take a look, all right, specifically at the VIX. Here where it was. That was the VIX-explosion. That was the last time that we saw volatilities, okay, amped up and short volatility the way that we currently are. So you need to be aware at this point in time that the short volatility trade, people, that's the risk, okay, that are amplifying. And as the markets fail to gain new ground, okay, that's just making it worse, because when trading firms feel that there's no easy way to make money, all they do is just stack on more short volatility, because you still have to hit your numbers. They don't care. They still have to hit their numbers, and you better remember that. So Bridgewater, okay, they're not buying puts. They're short volatility. Selling volatility futures is all about a hedge with SPX puts. With that, let's get down to Stock Chop. A little bit of fun this evening here on Stock Chop. A couple of stocks that I wanted to cover. The first and foremost, come on, it's Tesla. Okay, Tesla. Yeah, it's a truck with a flux capacitor. Apparently, they didn't like Tesla's new truck. Here's one right now. I wouldn't short. I would still expect Tesla to bid back up. Okay, I am looking to once again take a short position inside of Tesla. It's not there for you yet. It's simply not there for me yet. And, people are probably like, well, where were you yesterday? You should have taken a short position yesterday. It's not there for me yet. And the reason, again, I want to reiterate that if you open up a full-blown chart on Tesla, it's very likely that this stock is not just going to test all-time highs, but that this stock is actually going to crest through 400 before we get another good short opportunity. Apple. Let's go to Apple. Beginnings of the end of the beginning. What do you think here in Apple? This has been one of the most spectacular statistical moves. This is something I've covered extensively week in and week out, and the last couple of trading days has pulled in. The reason I'm actually mentioning Apple, first and foremost, yeah, I got a position inside of Apple. There's no question about it. I've got a short position. It's in the money. That position's actually almost ready to come off profitably. But this is not a conversation about Apple. This is a conversation about if Apple goes, it's going to take everything with it. Okay, Apple, watch it very carefully in the days to come, along with the financials. As I said, the financials, they have 1,000-pound weight on top of their head. Apple, this may have already been kind of a key reversal. Next one, AMD and Cisco. If you're ever into pairs trading, I'll make a good argument for the AMD Cisco pairs trade. AMD exploded to the upside. It's pulling back a little bit. Listen, I have, trades specifically inside of AMD. And I've had trades inside of Cisco without going into too much detail right now, though. Okay, Cisco, bottom of the barrel, AMD, top of the game. It's actually a nice pairs trade. So you can start to play around with like AMD, okay, minus Cisco in here. The two are very, very comparable. Now, you might think to yourself, well, they're totally different businesses. Please, I understand, okay? And at the same time, that's not what we're here to describe, okay? We're here to actually look for an opportunity, one stock that's possibly bottoming and another one that could be at a top, and a way to actually effectively kind of gel those two positions together. Look for more of this throughout the course of this next week. I'll set that one up next week for you as a pairs trade. By the way, AMD Cisco, it's not as clean as it seems. AMD has almost twice the volatility of Cisco. All right, next on the list, Mickey's on fire. Disney. Taking a look at Disney. Once again, hitting new time, all-time highs in here. You got to just open up a maximum available chart, because for years I used to say, Disney, it's a stock with a nail in its foot, right? 20, 26, 20, 26, maybe 28, 30, 26. This thing did absolutely nothing until, of course, in recent times, where apparently Mickey is taking over the world right now. Oh, and Frozen's coming out. It's Frozen 2. I apologize. Anyway, looks opportunistic in the very near term. Okay, and the possibility of a short position does come to mind. I'll keep you updated on that. Next one on the docket over here, MJ. We are now long, and I've mentioned this. We are long, okay, the ETF for marijuana and short some puts in here. So I'm short some puts and actually long some stock. It has pulled back, okay, but we're looking for more opportunities. This is one that I actually do want to own a little bit longer term. Last but not least on that front, none other than Uber. Okay, Uber, missed it. I actually bid for the stock a number of times over here. I tried to put on call spreads, missed it. The stock exploded to the upside. If by chance Uber does pull back under 26, we'll look to be selling some options premium if the stock actually crests back under 26. People, again, it's a lot to think about in this weekend's update. Okay, the trade that's on right now that you need to be worried about, no doubt, is the short volatility position. Because what a short volatility position does, it takes docile markets and it just really, okay, rains down volatility sooner or later. Thanks everybody again for joining us here at TheoTrade for the weekend update.